So how I want to start off this class before 10 o'clock comes is I want to look through the latest CFTC data that was released on Monday and examine what's taking place in the markets right now. So as I posted on Twitter, you can take a look here and see for yourself that we have institutions increasing long positions from 364,000 up to 381,000, which is quite significant. All right, it's like massive, that amount. And if you take a look at, the maximum amount of long positions that the institutions have ever held is 389,000. So we're at 381, which is just 8,000 away. So when you take a look at the gold chart, and you look at when's the last time the institutions were at 389,000 positions, it was right here. Okay, that's the last time the institutions held 389,000 long positions. All right, so you can see what happened there, and you can see, leading up to these highs, 338 was here. Okay, so it's not out of the norm to see a rally up and big long positions at a peak, and then a push even higher with even more long positions. Okay, it's not out of the norm to see that, and that's what is taking place right now. Okay, so we had highs here, they took some profits, and then they're accumulating, and now we're at massive amounts of long positions. So, I mean, where's there left to go? When you are already at your max, how much more can you be buying? All right, that's what it comes down to. And so what we've seen is that when they are at their max, there's really not much more that they could be adding. And you can see that on the charts. What have we hit? Right here. Okay, we hit that massive area of supply. So with price hitting that massive area of supply, and then you add the fact that they are at extremes in long positions, and then you add the fact that everybody's buying gold because of what's taking place in the news, it's quite uncanny how everything works out the way that it's working out right now. So getting back to the data, when you take a look at the data, you could see clearly that there was this push up to 370s, some profit taking, and then last minute adding in long positions to cause the rally. And so everybody and their grandmother is drawing this trend line right now, right? So that looks like an uptrend. So what do you think is going to happen when price comes down to that trend line? You're likely going to see buying. Okay, you're likely going to see buying right down there. And then that will likely be the area that they will break, create supply, react to the upside, and do something like that. Very likely. Okay, based on market dynamics, based on how the markets typically will play out, based on what is taking place with the charts of gold right now, if I had to bet my money would be on that playing out, what I just showed you. Okay, so gold is at max, likely going to drop. Now let's take a look at the next one. Now we look at oil. Interesting, because we see that just recently this weekly area of supply has been removed. Okay, and what have we been saying in the reports all this time since price was down here? That we've uncovered evidence to suggest that over the longer period of time, price is going to continue going higher. We said that when price was down here. Okay, and so what has taken place? We also said in the report that we see evidence of them of price wanting to go higher over time. And so let's keep an eye on the long positions to see if the institutions are going to start accumulating a long position. And lo and behold, what do we see here on the longs? We see them starting to accumulate a long position. So I mean, you know, can you see how this is all tied in with what is going on now? Is it a coincidence that, you know, we uncovered evidence to suggest that there's going to be a move to the upside, and now right here at this phase of the market, where price is rallying up to the top of the range, that we have these situations happening in the world? I mean, you know, I'm not a conspiracy theory type of guy, but when you study the markets for a long time and you know what to look for, and you know and understand market dynamics, and you know how the market will typically play out, okay? When you start to see economic events help facilitate the moves that were already being dictated by how the market will typically play out, okay? When you see it happen so many times, the first few times you think, oh, that's an interesting coincidence. But when you see it happen all the time, you start to recognize, wait a minute, something's going on here. How could this be so perfectly timed? How is it that no matter what happens in the world, you know, the news will always have a certain spin on it to reflect what the institutions want, or sometimes it'll just be so conveniently timed, you know, when the institutions need to break out price to the upside. They've already accumulated a decent long position, and then you have these situations play out in the world that help facilitate the move. So it's crazy. Do you remember what happened here on this spike up? It was some other economic event that had to do with the Middle East. I can't remember specifically what it was. And we had institutional supply here. And what did we say? You know, what's going to happen? Right after that event, everybody was buying oil. Why? Because they were expecting something like this. You know, this is what they think. This is what retail traders think. The bomb, when they bombed the tanker, was that what it was? I don't even remember. Retail think this is going to happen. You know, every time some news event like that comes out, and it's described as being quite significant, you know, retail traders think that that's what's going to happen with price, so they buy. And what was I saying? I came out on Twitter and I said, everybody's buying right into a supply zone. I mean, you know, the institutions and the supply and demand by the institutions are the only thing that matters, period. You know, over and over again, you'll start to see this. It doesn't matter what's happening in the world. It never matters what's happening in the world. And it's a hard thing to grasp, I know, because it was hard for me to grasp that when I first started studying the markets on a very deep level. But when you see these circumstances play out like this over and over again, you start to realize, wait a minute, you know, what happens in the world means absolutely nothing on the charts. It's really all about the supply and demand of the institutions. So we had that situation here where they tricked retail traders into buying right into supply, shot it back down. How many people lost money there? I mean, how many people were buying here, buying at the top, and then got stopped out on the way down? So now we have a situation where this supply has already been used. Okay, it's already been used for its purpose. So price comes back down, and now on the way up, because this has already been used, it's more likely that this area will break. Hence why now you have the situation with what's happening in the Middle East right now, being allowed to take this area out. And so you could look at it whatever way you want to. Some will say, well, you see, we bought because of this this situation in the Middle East right now, And if you're lucky and haven't been stopped out yet and you hold, you could probably get a nice little rally in a price like this. And you're and when I say you're, I'm not saying you guys specifically. I'm saying that you're the typical retail trader. What they will say is they'll say, well, you see, it is true. You should be buying oil when these events take place because look, eventually oil did rally. Yeah, I bought it when price was rallying over here, and that didn't work out too well. But it could have been mistimed. It could have been this. It could have been that. Whatever reason, it's just like the casino addict who goes into the casino and plays the slots and loses, but that one time that they win, which doesn't even make up for 1/3 of all the losses that they've incurred, they get so happy and they say, see, it is possible that I could win. And that's what they focus on. They focus so much on that one time that they won, and they're not focused on the fact that they're losing, and they look at that and classify that as a win. And so in their mind, that is what fuels them to continue doing what they're doing. So, and the markets are the same way. The only thing is that you have to understand that if the institutions are going to let you have a payout, it's to keep you somewhat interested in the game. Because if you lost every single time, then eventually you'd say, forget this, I'm leaving and doing something else. And they don't want that. So, but when you're doing true analysis, okay, when you're actually looking at the markets and examining what is really happening, the reality of what's taking place, then you understand why it dropped when it rallied this time and why it's going to continue going higher this time. Okay? When you understand the reality and understand true analysis, then you know what is taking place. So that's what's taking place with oil right now. And as I mentioned, you know, if we take a look at oil, as I mentioned before, if you take a look at a weekly chart of oil, you'll see what we have here. The really nice weekly area of supply, which had a small test of it here and dropped. So what does that tell you? Well, let me draw a line across here. Oops, that's not what I wanted. I wanted this. Okay. All right, so this portion of supply that I'm drawing this line across, this portion of supply has been eaten up when price came up and tested here. So what is likely going to take place is price will continue going higher and test the unused portion of this supply zone here, and then we're going to see a reaction. So that will be a breakout of these highs. Okay, so how many traders do you think are out there right now looking at these events that are taking place and how they're escalating, and they're thinking to themselves, what's the perfect way to get involved in oil right now? I know oil is going to shoot up because of what I've been taught about oil and how the demand goes up when there's a lack of production and all this other stuff. So what would be a good technical signal for me to look for? Oh, how about when price breaks up past the previous highs over here? That'd be a good one. So price will come up, break past those highs, enter deeper into supply, and drop down. That's likely what's going to take place. Okay, and so we're also going to be entering into a higher time frame area of supply here on the monthly chart, right here. Right there, right here, just above price, and then that will come down, cause price to go down. So a lot of things are going to play out in the weeks and months to come. So it's interesting to watch. But I'm pointing these things out because I want you guys to see exactly what's taking place. I want you to have a better understanding of why the market is doing what it's doing, so that as it plays out, you're completely aware of what's going on. Okay, you're not listening to what the media is telling you, and what the news articles and the so-called experts. I mean, earlier this morning I was tuning in to a feed, a live feed from this analyst from a pretty reputable website that does forex analysis, and what they were saying was just as incorrect as what you see in the news. I mean, they're trying to sound so intelligent by breaking down, what is taking place, and then how that affects trade wars with China, and how that's going to decrease this and increase that, and rates, and all this technical jargon that is just like completely ridiculous, utterly ridiculous. And I'm listening to this and I'm thinking, you are just as bad as the media. What you're saying is just as ridiculous, and you're showing a chart of the US dollar, and you're saying it's an ascending bearish wedge, and this doesn't look good because, like, if you put it into your mind that, what's happening with the trade wars in China is likely not going to be good for the States, you're going to look at a chart and you're going to see a bearish wedge, okay? But if your understanding of what's happening in the world is a bit different, and you see it being good for the U.S. economy, you're going to see a bullish flag, okay? An ascending bullish flag. You'll see whatever the heck you want to see. It's like one of those tests. What are those tests called? The Borjak test or something like that. You pour some ink, and it's like, what do you see? Well, to a deranged psychopath, they're going to see something nasty. To somebody who's happy with their life, they're going to look at it and say, I see balloons and teddy bears. Okay? So depending on what your beliefs are, you're going to look at a chart and see what you want to see. And so that's why this stuff is ridiculous. That's why when I tune in and I see this stuff, and I don't make it a habit to tune in because it just boils my blood when I see this, because it's absolutely ridiculous. If you, it's just you're not seeing the reality of what's happening. So if you're spending time looking at the markets, you should only be looking at and spending your time looking at what's truly taking place, because then you can add to your experiences and build up, your knowledge base of how the markets actually play out, and what's really taking place in the markets. And I know you guys know that, but I'm going to keep on repeating it over and over again because it's so key to understand that. So, we go to the dollar, right? And here's the dollar, and we look at a chart of the dollar. Bullish wedges and bull flags and whatever. All that stuff makes no difference. You could see whatever the heck you want to see. You can look at it like this chart and say, we have a downtrend. I mean, on the higher time frame, it looks like it's going to go down, because if you look at here, highs, lows, and then it looks like it's going to go down. You could say that. You can stretch this out and say, oh, we have an uptrend because we have a line here, and so price should come down here and then go up. Okay, that's another perspective. I mean, you could have 100 different perspectives of what's going to take place with the US dollar. 100 and more. But when you're studying what's actually taking place in the markets, and you're combining it with the CFTC data, and you're looking at what the institutions are doing with their positions, and you're combining it with what's happening on the higher time frames, work your way down to the lower time frames, understand how price plays out on these time frames, where in the storyline you are, then you have a pretty good grasp of what's taking place. And it's only if you have a good grasp of what's taking place should you ever speak out and share your opinion. You know, that's just my perspective. Because when somebody is just sharing their opinion, it's just an opinion. But if you're going to tell somebody this is your analysis on something, you better be damn sure that you know what you're talking about, not your opinion. Nobody cares about opinions because everybody has an opinion. Opinion means nothing. You know, that's just your perspective. We're not here to talk about what our opinions are or our perspectives. We're here to examine the facts, the reality, and that's it. You know, you look at it this way. If there was a crime committed, okay, and there was a lawyer that was representing the victim in a court, and the judge said, okay, what do you have to say? And the lawyer says, well, we believe it's this guy, okay, because he was walking in the area, he looked a little fishy, he had a little weirdness in his walk, you know, when he was walking he had a little bit of a limp, you know, and we've seen movies before, right? You know, when they walk with a little bit of a limp, they're usually like bad guys or crazy guys. Yeah. So he was walking in the area with a little bit of a limp. And, you know, based on that, it was dark. We were wondering, what the heck is this guy walking around when it's dark? And, you know, he looks pretty guilty, right? Bearish flag. Doesn't this look like a bearish flag to you, sir? So, yeah, so we think this is the guy that did it. What would a judge say in a situation like that? He'd say, are you crazy? Is this your argument? You want to judge somebody based on all these opinions, you know? So I look at it the same way when it comes to market analysis. We can't just have opinions. We have to be looking at facts, reality. And if you're not looking at facts and reality, you're never going to learn anything. Because these people who are looking at the dollar saying, oh, there's a bearish flag, and here's all the economic reasons that are supporting a weaker US dollar. When it rallies, what did you learn? What do you learn? When the dollar rallies from this area and continues going higher like this, what did you learn? What are you gonna? How are you gonna explain it to yourself? How all that economic data that you were analyzing produced a conclusion that was incorrect? What are you gonna say? Somehow, if you don't have the brains to realize that that methodology doesn't work, and you have to go back to the drawing board to figure out where you went wrong, what you're going to end up doing is you're going to end up explaining to yourself, you know, what factors came into play that made that analysis incorrect. As opposed to saying, listen, I got this completely wrong. You know, maybe economic factors don't play such an important role. Why was I looking at this as a bearish flag? You know, I should have been looking at this as a bullish flag. How did I get that wrong? You know, so if you're not studying the realities of the markets, what I'm trying to get at here is you're not going to be able to learn over the long period of time, because you have to learn from your mistakes. If you mistakes are good, but if you don't learn from the mistakes, where are you going? You know, where's your future in this business? You know, if I make a mistake, guess what? I learn from it. I know exactly, I figure out exactly why I was wrong, and I add it to my repertoire. And guess what? When I study charts, I apply what I learned from that mistake, and I start to see new things in the markets that I was blind to seeing before. And then I start applying that to my analysis, and guess what? The analysis becomes even more better than it was before. So I'm not just correcting myself and assuming that the corrections I'm making are the correct ones. If you understand what I'm saying, I'm not just assuming. I'm looking at the markets and letting the markets tell me I'm correct. Okay, because it's one thing to say, well, I got that wrong, the dollar ended up going higher, and here's the reasons why I got that wrong, because my interpretation of what was happening with China was incorrect, and it was actually very positive for the dollar. If you can't apply that lesson to something in the future, or go back and apply it to something that happened in the past and see that you would have been right if you would have applied that same logic to something in the past. If you cannot do that, you don't know 100% if you're even realizing the truth. If you're even recognizing that you have the correct interpretation. You guys follow me here? Yeah, so I mean, it's just bazonkers, I swear. And you know, somebody was like, they wrote a question to this guy and said, where do you think, I'm just new to trading, how can I start to learn this? What would you say? And the guy goes directly into talking about getting these macroeconomic books and learning about fundamentals. And I'm like, oh my God, there goes another one. There goes another one to add to the bucket of losing traders that are going to just, you know, have a lot of frustrations in their life. So we look at the dollar, we look at their positions, and what do we see? Nothing, 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 nothing. Remember, contracts expired back here December 17th. And what did they use those contracts to expiring for? To offload a large amount of long positions. So now we got both longs and shorts cooled off. I mean, their total size position 37,000, very low. Or 37,000, yeah, total positions, very low. Here, September, 77, half the size from where we were back in September. So they're not even focused right now on the dollar. What do you think their focus is on? I think their focus is on gold. I think their focus is on oil. Isn't it interesting? Back in December 17th, they said, hey, let's not focus so much on the US dollar. Let's take out, let's not be so focused on that. We should be focused on oil and gold right now. Interesting, isn't it? Early December, interesting. And you know how people say, oh, you know, there's not going to be a lot of moves around the holidays because institutions are on vacation. Does it look like institutions are on vacation between December 30, between December 24th and December 31st? 364,000 to 381,000 increase in long positions. Yeah, it doesn't look like they're on vacation. All that is a myth. What did I say at the beginning of December? That every holiday something big happens. And what was it? It was the last year, January 2nd or 3rd, we had a massive drop in U.S. Dollar yen, and this time it was the dollar right here. That was a big move. Okay, and what's happening with oil and gold right now? Those were big moves during a time of lower liquidity. So yeah, so the focus has been on gold and oil right before this big event taking place in the world. So I hope you guys recognize how there's something bigger going on in the world than what we thought. Okay, there's a lot of corruption. There's a lot of money being invested in these markets, and these people that are investing money in these markets, they're not going to play games with their money. They know exactly what they're doing. They know exactly what is likely going to happen, and they know how to position themselves before these things happen. So we look at the Aussie. The Aussie is one of those that we wanted to look for in opening a trade. Now, we had this weekly area of supply get hit, price dropped towards the weekly demand, and has actually hit it. Here's the problem. When gold was rallying, the dollar did nothing. Okay, dollar did nothing. Look at that. And my expectation was that if gold was going to rally, we were going to see something like this on the dollar. Okay, And if that was going to take place on the dollar, then it was likely we were going to see a move up in the Aussie. But with the dollar holding steady like this, and we know why, because they're not even focused on the dollar. That's why the dollar is not doing anything, because they're not even adding any positions. So the fact that the dollar did zilch when gold now is rallying up hardcore into supply, what do you think is likely going to take place when gold decides to drop? Okay. What's likely going to take place is stronger dollar. And if you take a look at the monthly chart here, what do we have? This area, okay, which corresponds to very similar what we have with the euro. Okay, we have that same supply here, but weekly supply being hit. And this is one of those supply zones that we've been looking at for quite some time about seeing a drop from, right? So so we don't see an accumulation of positions in the Aussie right now, okay? Very slightly from 39 to 49 from the last data that came out December 31st. Yeah, a slight increase, 39 to 49, but that's not enough to get excited, especially when the dollar's not moving, okay? If we saw signs that the dollar had no demand in play and supply was being created left, right, and center, and supply was in play, then I'd be more inclined to buy the Aussie right now. But that's not the case, okay? And we don't see a big accumulation of long positions here. What we see is shorts are still very aggressive. So, you know, even though the chart dynamics suggests that this could be a good area to see price shoot off from, you know, when you examine everything else, it's not supporting a nice move to the upside. So, you know, we know what to look for. We need to see proof that price is going to go up, because again, we're not going to just be subjective and interpretate the market, the charts in the way that, and you know what, when we're looking at the charts, we know what we're looking at. We're not just saying, oh, this looks like a bearish flag or whatever. We know the reality. But even though we know the reality of what's on the charts, it doesn't mean you just buy blindly, because you can get certain market formations to present themselves, but it doesn't necessarily mean that they're presenting themselves for the purpose of a stronger rally. Okay? So I got to hold off on that, because I don't like the fact that shorts are still very aggressive. Dollar didn't drop. Looks like gold is going to drop, and the dollar is going to rally, which is going to put a lot of pressure on this to the downside. So I don't want pressure to the downside on a currency that I'm holding long. And then we got the US CAD. As you know, we exited our short positions. Why? Well, same reason. Because if you look at the dollar, it didn't drop, it didn't move, and it's being supported by demand, and gold is at max. So if there's going to be pressure to the upside on the dollar, then that's going to put pressure to the upside on this pair, even though the chart looks prime for a drop. And why do we think it's prime for a drop? No, not because we have a bearish, ascending bearish flag and whatever garbage. It's because the ascending trend line that's here is in the process of being broken. It's because the weekly demand zone created by the institutions were taken out. They took out an area where their algorithms say this is an area we want to buy or accumulate along. They took it out. So why are they taking out an area where they would want to accumulate a long position? Why are they creating areas of supply? Well, typically it would be to help facilitate a bigger move to the downside, but it may not be that for that purpose right now. Okay, so we got to be careful. Yeah, the data looks good for a bigger drop on the US CAD. We had back in November here, very aggressive, and then they took profits on that, and now we're starting to get more aggressive. This is good. The data the positions held by the institutions supports a bigger move to the downside for sure. But I'm just not liking what the dollar's doing and what gold's doing. And if you add those two together, it could spell havoc for a short position on the US CAD. US Swiss franc, we have not much going on, price dropping from supply. Shorts are just a tad aggressive, but look here. Do you think they're focusing on this? No. Neutral. So we go to the euro. What do we see? December 31st, they increased long positions and they increased short positions. Whoop-de-doo. So pretty much, again, nothing going on here. You look at the coloration of the cells here, neutral, not much going on. Yes, slightly increased net positions up to minus 74,000, but to me, this makes no difference to me. And you look at the pound. Pound is looking good for a long, okay? And here's that weekly area of demand that we were looking at, and I had mentioned that that is a good area to open up long positions. But once again, there's a but there. Okay, there's a but, because we need to ensure that price is going to continue like this, and so we know what to look for that, because when you look at the monthly chart, it could just as easily do that. Now we look at the data, the pound US dollar, and what do we see over here? In longs, they're accumulating a long. So this is good. This is supporting a bigger move to the upside. This looks good. You see how this looks completely different than the Aussie, right? If you examine the two, they're telling two different stories, okay? This is supporting a bigger move. Look at the coloration of the cells here. They're turning green, bullish. Look at net positions. They went from negatives to now into positives. So this is good. The only thing is that when you look at the current market dynamics, monthly chart, momentum to the downside broke, causing a move to the upside. What typically happens, like we've mentioned so many times, what happens when the forest workers start going into the forest and cutting a path into the forest? Eventually they get tired and they need to reverse back to the camp, reload for another move to the upside. When you look at the monthly chart, this is what is taking place. When they push price up to the upside, they can run out of steam at any point. Is it possible that they just retrace halfway back towards their base and then regroup and leave? Yes. But how do we know that 100%? We can't just assume that that's going to happen and buy there. That's why we're waiting on the lower time frames to wait for the signal to be presented. Okay. Ideally, best is retrace down here. If it retraces down here, I'd be a big supporter of buying, 100%. Okay, big supporter of that. So this has great potential for long. It's just, you know, we can't assume that we know what's going to happen. We have to actually see factual evidence to support that it's going to happen, and then I'll get involved. US dollar, Japanese yen. So again, weaker dollar, and we see that reaction from the descending trend line. And we look at positions, and they dropped off some of their long positions. They used to be at 96,000 down to 68,000 now. And you look at shorts, 49,000 down to 43,000. So not much in terms of that. We are still bullish, okay? If you look at everything since October, late October, we are bullish. And the higher time frames are suggesting a bigger move to the upside as well. Okay, just need that darn trend line to get taken out first. But there's a lot of retail selling taking place, so they're going to let that go through. And the Kiwi, same thing on the Kiwi. Look at here on the monthly chart. All right, same thing. Drop. Do you know it's going to go like this? Do you just assume that you know better than the market? No, you wait for the market to tell you 100%. But if price comes down here, yeah, that'd be a good area to buy for sure. And let's go quickly to take a look at that Kiwi chart. Yeah. Let's see. That was tested already. Yeah, there'd have to be some strong support down here and buying for me to buy, actually. Yeah, because market dynamics suggest that this could easily be taken out too, and we see a push lower. So there'd have to be a confirmation to the upside. We need to see buying actually taking place. Okay, so yeah, an increase in longs, that's great. We were expecting that because that's what took price up into this area of supply. So an increase from 18 to 23,000, that would be expected. And net positions from very aggressively short, not as much anymore. All right, so that's what's going on with the CFTC data and the positions by the institutions. So tricky time to trade the markets right now, but that's what we've got. Okay.